All right, good morning. So it is Tuesday, the 20th of February, 2018. Tuesday, the 20th of February. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, and never risk money you cannot afford to lose. Hello, my name is Wayne. I will be your guide this evening or this morning through the New York trading session. Today we will develop trade plans, look at the trade at the event risk calendar. Look at your plans, look at my plans, talk about Forex, about fundamentals. Before I started the webinar, I asked you, hey, we have in fact the largest issuance of US debt on the market this week. Who's going to buy it? So we can talk about things like that. We do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. First Friday of the month, I'm at FX Street, where I host their most popular webinar, attended by over 1,000 currency traders, called Trade Non-Farm Payrolls Live, and I've been doing that for 12 years, almost. 11 years and 10 months, if you want to be specific. Cool. All right. So who is going to buy this debt that the United States is issuing? The largest issuance of 6 months and 2 years, I think. Something like that. Shorter end of the curve anyways. Who buys this stuff? Joe says no idea. Well, yields have gone up on the 2-year by 100% in the last 6 months. Interest rates have doubled in the United States on the 2-year. Wait, 2 years doubled. The 10 years up 50%. Somebody's going to buy it. Juan says Japanese investors. Pete says foreign banks, corporate banks. Matthias says China. Could be foreigners in general, right? In a closed economy, you wouldn't have foreigners. But in an open economy like the United States, especially if the interest rate, okay, how would you draw this? You'd have to say the real interest rate. Come on, drawing tool. Okay, the real interest rate, R star, is greater than the world rate, right? So money flows this way, perhaps, towards the United States. So we'll call this R star, US, not YouTube, United States. Okay? So money flows there, so they want to buy treasuries because they're going to get a higher return from a US treasury than a European one, right? Than a Bund or something, right? Right, so Chuck's taking it the other way, and he says, yes, that might help explain the current US dollar strength. Oh, I wish I would have thought about that earlier, Chuck. Wait, that's what I'm talking about. Yeah, you got it. So anyways, dollar's been strong lately, and I'm just wondering if it has to do with the U.S. government issuing this debt. Okay, now. Problem is, all that money that goes to the government could have gone to a business. That sucks. right? Because you know the government's going to waste it. So what does a corporation have to do now to try to persuade investors around the world to loan them money and not the U.S. government? Juan says it should indirectly. I don't buy that. Nah. Be awesome, not necessarily enough. Better yield, thank you. So interest rates go up because the government is sucking the money out, and they call this crowding out. So the government is crowding out because there's only so many loanable funds. How would I draw this? How would I explain this? Hang on, let me turn drawing tool off. Let's use the CAD here. Let's go template. Let's see if I can draw this. Don't even know. Let's do it on the fly, bro. On the fly. Okay, interest rates. We'll call this rates. We'll call this the volume of loanable funds. Ooh, loanable. Right, Ryan? Loanable funds market. Ryan could do this, right? All right. Not just yet? I bet you could. All right, so what kind of slope would represent the amount of money available to be invested, either into treasuries or into corporate bonds? Supply, but what's the slope? There's a certain amount of money. What kind of line represents it? You get super bonus points if you get this right. Long run. No, now! Not in the long run, now! Today, let's say there's some sort of number, right? Boom! There, Ryan's got it. It's vertical, it's inelastic. Nice, Ryan's got it. There's only a certain amount. That amount, how much is that? Don't really know, but it's a number. Okay. And then, so we need another line here for demand for this money. Okay. This is demand. This is supply. Okay. So here's the market rate. Should have drawn a little lower, but anyways. So here's the equilibrium rate. Okay. So the government comes in and sucks up a couple $100 billion this week of the amount, the volume that's available. What happens to this vertical line? It shifts, okay, shifts where? Shifts left. There's less available now because the government came and sucked it up to build a wall to keep the Mexicans out or something, right? So it moves to supply 2. There's less volume, right? So you can make up a number. 1 billion, 100 billion, 200 billion, 300 billion, 400 billion, 500 billion, whatever. So the amount has gone from 300 billion to 200 billion. That's all that's left. And look at R2 is now here, and interest rates went up. So anyways, I'm just wondering the effects of the U.S. government borrowing so much money, especially all at once. What do you think? Do you think the 10-year T-note's going to break 3% this week? Government's borrowing like crazy. So other people that want to borrow need to pay a higher rate to attract it. Because the theory is investing into a U.S. Treasury is risk-free. So now you got to pay more than that, and you got to compete. Because now you're competing against, just imagine your company, you have to borrow money to build a factory. You just have to. Orders are huge, and you're working at full capacity, and you just can't make up demand. And your customers are thinking about maybe going to a competitor because you just can't even, they like you, but you can't fulfill the order. So you're like, oh my God, I need to build a factory and I need to do it right now. And you go into the market and it's just a whole bunch of other companies. They're like, no, lend it to me, lend it to me. You're like, whoa, I need this factory. Don't lend it to him, lend it to me. And all of a sudden it's like an auction, huh? No, I'll pay you 5%. I'll pay you 5.5%. Oh yeah, well, I'll pay you. Now it's like an auction, right? No, I'll pay 6% on that loan. He says 6.5. You're like, oh, and people start dropping out, and the highest rate wins, right? Well, you can look at it as the price moving down, Ryan, or the rate that they need to attract the investor has gone up. I kind of like to look at it that way, literally like an auction. I'm a billionaire and I walk into a room full of people that want to borrow money. I'm going to get the best deal, right? Well, it depends who, right? It depends who. So I'm just trying to explain that this week the government of the United States of America is issuing debt. They're selling debt. They're borrowing money. Okay? And to the largest that they've ever done in the history of the United States government. Maybe it'd be a 30-day and a 1 year. I don't know. There's shorter term debt, right? But the government is borrowing at a scale unseen before. That's interesting. Two, they'll sell it. We don't know at what price they're going to be able to sell it, but the government doesn't care. It loses money every day. It can lose all kinds of money. It doesn't matter, right? Okay, 4 week and 6 months. And three through. All right, so they're all shorter. Thank you, Ryan. So 150 billion, right? Well, that 150 billion is now, because it will sell, that 150 billion is not available in the market. The government is removing it from the loanable funds market. What's the consequence of that? See, you got to be smart about this. Interest rates go up. What kind of interest rates? The Fed funds rate? No. Prime rate? No. Discount window? No. What kind of rate? Credit card rates? Probably. Mortgages? Probably. And the cost of borrowing for businesses, which will eventually eat into profit margins at some point, because now they have to pay more money to borrow money. And if you're a business, you borrow money all the time. And if you don't understand that, think about this. You're General Electric, and you have a factory. You make nuclear power plants or something, or parts for a nuclear power plant. It takes 3 years to build the nuclear power plant, let's say. Well, you get paid intermittently, right? So you build the foundation, and then the client, some the federal government or some state government pays you money. And then you build the cooling tower, and then they give you some more money. And then you put in some equipment, then they pay you money, right? So you get paid throughout the life cycle of the 2 or 3 years it takes to build this nuclear power plant, but you get paid like once or twice a year, right? Right? You understand that? Right? You get paid every 6 months, every 9 months, every 12 months, whatever, right? But how often do you have to pay your employees? How often do you have to buy concrete and rebar and bulldozers and put gas in your or diesel fuel in your bulldozers, and you see what I mean? So you need to borrow for that. That's just cash flow, right? They hired you because you can you have the skills and the tools and the technology, right? You have the capital and the labor to build the nuclear power plant. Great, right? Labor as input cost, aka money. So you borrow again to pay today against your future cash flow from payday, and okay, you see all of that. But if your profit margins are 5%, it costs you 5% to borrow money to keep the lights on and to keep the bulldozers moving and to keep the cement trunks pouring their concrete, right? If that costs you 5% to borrow, then what's your profit? Yeah. So I wouldn't take it that far. Are we still, are we inverting the yield curve, and is it the end and all that kind of stuff? I'm not saying that, but I'm saying things are changing. Okay? And some people are not aware of this, right? I'm trying to say you should be aware. We're no longer in the trough. We're no longer in a falling market. We're in some other market, and conditions are changing, right? So anyways, if there's a large demand for these loanable funds or for these treasuries, you have domestic investors, which are being crowded out. And if these are foreign investors buying the treasury, right, because now we're in an open market, right, or LOE, large open economy, then foreign investors are going to want to come in and buy those because our rates are higher than the world rate. So if they decide to invest, they're going to have to demand dollars. And so now we could do a supply and demand for dollars available in the foreign exchange market, and local currencies will go up. The demand, the quantity of whatever local currency, whether it's Chinese currency, Japanese currency, Vietnamese currency, Malaysian currency, British currency, European currency, whatever currency from all these global investors, that quantity is going to go up, because what are they doing? They're trading all that currency for the US dollar, so the supply will go down, right, of the US dollar, and the supply of everything else will go up. And that could create dollars, right? Changing the value and purchasing power of the US dollar. The exchange rate changes, right? All the simple stuff. Cool. So that's what's going on in my mind. How interesting, right? Brian says, so the Fed's not raising interest rates on unloading them, right? All that kind of stuff. Well, so I'm talking now about fiscal policy. I'm not talking even about monetary policy. So the Fed's doing what the Fed's doing, right? Raising interest rates and dumping their balance sheet. But now I'm talking about Trump. He wants to build a wall, issue $150 billion in treasuries this week. It's the Treasury, right? So now you got fiscal and monetary policy. So I'm talking fiscal side here. The White House, the Treasury Department for the United States government is borrowing $150 billion this week, on top of whatever monetary policy the Fed's doing. Totally separate. And so that's going to raise a different type of interest rate, not the Fed funds rate, not the prime rate, not the discount rate, right? Now we're talking about yields. All right. Sorry to go so fundies on you guys, but I think it's interesting. I think that's kind of some of the stuff that I think the professionals are thinking about, right? Cool. So we were talking about this WTI. We have it down in here. Remember, I said I wasn't really sure, not very confident. I think it's going to go up. I think it should go up, but I'm ambivalent. I'm going to stay neutral. But I believe I know what it wants to do, right? And that was return back to this point, right? Wasn't it 63, right? And I'm just an economist. I don't know anything about that. So anyways, when we were down here, we said it should probably go here. Then there was a spike at one point, so we said it should come back, should roll reversal, and then continue up. Something to that effect, right? Lo and behold, it's kind of done it. Can anybody confirm this? Okay, cool. Yeah. Notice how important the pivot points did play in this and in that. I can't remember if I drew this orange line before the drop. I kind of think I did, right? I drew this out, said, look, it'll probably come back, and then here, and then you would look to buy it, and maybe it makes a higher high, maybe it doesn't. We don't really know. This is where you'd face your risk, all this kind of stuff. So that's cool. So like I said, to each his own, right? Is that an opportunity to buy and trade it and all that? Like, yeah, everything's fair game. That's the cool thing about trading. Whatever you think is real. We just don't know if you're right, right? But you could totally trade that. I just kind of said, yeah, well, don't really want to. We'll have to look at what happened with some of the other pairs. I kind of think, okay, correct me if I'm wrong, okay, correct me if I'm wrong, but I think I said last week that there was a possibility of dollar strength, and we looked at it where we were based on the pivots. Is that correct or is that wrong? Yeah, are you sure? I'm not fishing for the compliment. I just want to make sure. All right, cool. All right, good. Cool. So pretty gosh darn lucky then, right? I said down to $1.23 and then maybe look for a buy. Okay, we'll take a look at that in a second. So we're looking here weeklies. Right? And you can see the conversation. Isn't that funny? And so you hear the conversation. But what would we talk about when we're like this? That there's going to be a high propensity for people to want to at least take profit. University of West Virginia. Very nice, Dirk. Okay. So you can see that that's a take profit zone, right? So if you're truly bearish, you're looking at this. If you're still a bull, you're looking at this or this. So Juan, you shorted based on our conversation? Yeah, well, okay. Yeah, but that's fine. Yeah, so Anthony's like, so Anthony did the same thing, right? Well, we don't know, so you need to manage your trade, right? So like, do I know if it's going to bounce here or drop down here? Do I know any of that? No. Right, Anthony? So, but I know that it probably won't happen here. It very well could happen here. Yeah, well, so Anthony says, well, dollar was oversold and the bond buying should help, right? Well, were you thinking that this weekend? Where you're like, oh, wow, right? The Treasury is issuing the largest issuance, right, of Treasuries. Oh, you did? Boom. There you go. Boom. Do it. Ah. Peter says, why? That's just where bulls buy. See, it helps, right? It helps to know the price. That's where a bull would buy. And I know that because it's just part of trading. That's the price. You could, it's just less likely. They would have to be quite aggressive. Okay, so it could, but this is just a better price. Okay, to buy. If you're a bull, that's just the better price. If you just can't wait, like you're biting out your fingernails, I gotta get in, I gotta get in. But I'm not sure we're in a market like that. So this is just the better bullish price. That's all. And if you're a bear, you should have shorted up in here or here. And it's just one of those things. Like if you didn't do that, you just don't know how to trade, right? I mean, we talked about this on Friday. That's setting it up, right? And you remember, I'm like, oh, maybe I should do a Friday afternoon thing for swing traders. And then I was so busy, and I'm like, I don't think I can, and all that kind of stuff. But do you remember talking about it? Like, look, it's here, it's set up, it's totally ready to go. It's at this is it. If the market's going to turn, that's the price. We have it now, right? You could do it now if you were aggressive. So look, it happened, right? It's just like, well, that's I think the analogy is like reading sheet music, right? If you know how to play piano, someone puts Mozart in front of you, you're like, I'm not familiar with the song, but I will play it, right? Da, 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 da. And you're like, oh, that was such a beautiful song. It's just there. That's what it says. So, like, why not here and why is this better? It's just it's just the music. It's just like that's what a piano with the dots and lines and the squiggly marks on the sheet of paper mean. That's the better price if you're a bull. Cool. Right? Swing trading course. Okay. So let's go on this one. Yeah. So you can already see again the same conversation. OMG. This was a little higher, so it makes me think this is our bottom. It was at 22.5. Ryan says 123. Yeah, 123.20 if you're a bull. Yeah, I could see that. So 123 is what I said last week. That's where you typically would buy, but I'm concerned that it was so overbought that it's an R1, S1 inside week. So I'm kind of thinking more like that, but both are fine, right? Oops. Typically you do this, but it feels more like that. Monthly is just below. Yeah, so the market will try to squeeze it all in because remember, there's multiple traders for multiple reasons. So just don't be shocked. Like if it did this, we would all say, "Oh, look, it's the weekly S. Oh, look, it's the monthly central. Oh, look, right?" And everyone would find what they needed to find. And you know, you have this going on, and we have sort of the big range, but yeah, maybe, right? So, Brooke, that's where you got to start looking at all these things and putting them together. Why not down to monthly, right? And what's the bigger setup here? What's the bigger setup, right? Double top, triple top. Is this an old man easing into a hot bath? We don't know, right? That means what? We're already slowing down for summer? I kind of hope that it's just it's the seasonality going into April. I'd like to see one more ginormous rally from the second week of April until July 4th. Right? So we don't know. So we got to play the smart. Okay? What do we know? Is the market aggressively bullish on this pair right now? Looking at this setup over the 1, 2, 3, 4, 5, 6. Looking at 7 weeks of data here. Is this hardcore bullish? All right, so let's talk about it. You would start to measure like this. There's a channel. Then you would start to measure like this. I think I would add sort of this area in here. Oops. Okay. So that's how I'm looking at it now. Okay. We hit the neutral zone down here. Where's my drawing tool? This is a neutral zone, the 200. To me, the 21 and 55 are dead. The only thing that matters in a scenario like that is price. Okay. So until we break out of this situation, I'm more neutral. Okay. Ryan says 4 hour very oversold. All right, fine. What you need to see is the change where it goes back into the trade zone and it indicates that it's no longer oversold. That's the more important, right? It could stay oversold for an entire week. as long as this keeps coming down. So remember, it's the candles that are creating the Stokes, not the other way around. Oh, it's already done it? Yeah. Gee whiz, my phone is just freaking out. It's amazing. Sorry. Ugh. Okay. So anyways, that's where I get to the situation. If you know, people are wondering, if it turns here, it's going to be important. Okay? And that would indicate a possible breakout to the upside. Okay? Down here is also important because what it means is a return to the top of the range here. And if we do this week, it's important because it tells me next week will be like that. Okay? But you know what's wicked awesome? Is we talked about this on Friday. Really? Dirk Vanderkirk, are you okay, bro? I think I've seen that message like 4 times now. Is there a glitch in the matrix? Yeah. Of course, we know it's a joke. There's no IT engineers in West Virginia. What are you talking about? You crazy. Dirk, so crazy. He crazy. I like you. You crazy. Yeah. All right. Cool, right? So it's interesting, isn't it? Oh, I thought it was University of West Virginia. Oh, well, anyways. So sorry I don't have answers for you guys. I'm only pushing you into the process of, are you truly analyzing the market? Because remember, I'm thinking months ahead, right? So I can't just look at the candles and say up or down. I mean, we do that, but it's like, all right, if this comes down, and maybe on the back of foreigners investing into the new treasury issuance, does it keep doing this until April? Okay. How long do I stay a bull if I'm a bull? But anyways. And here's Aussie. Okay. Right. Same thing. It's boring now, isn't it? I get it. I get it, Wayne. We looked at this. We said it would fall on Friday. Yeah, I get it. But now what? Well, what did you do on Friday? Right? If you didn't sell this on Friday, and I said, well, maybe you should buy this down here, you're not going to buy it down there because you didn't do that one, right? So let's pay attention. I don't know how far it's going to fall, but if I was a bull, I'd buy it in here. Okay? So I know, sucks, right? So last week on Friday, we knew there was a take profit here. That's for show. Do we know it's going to go up? Not really. But this is tradable, right? And as a bear, if you wanted to buy Swiss franc and sell the dollar, you would do it sort of here. You can see I already have it marked, right? A little higher. I must have drawn this last week because it didn't exist yet. Now I have a pivot here. And the next level's here. And I think it's interesting because it hasn't held. So this may give us courage as a dollar bull on other pairs, right? Because you're like, wow, but look at the Swiss franc. We're already blowing through both sell zones. And we're still trying to figure out on the other currencies whether they'll bounce or break. Well, it's already broken on this pair. So you could say, oh, well, based on my analysis of that, okay. USD yen. Once again, we looked at this. This is way hardcore oversold. But we knew on Friday that this was a possible buy zone if you happen to be a bull. But again, I'm like, there's nothing here that tells you you should be a bull. Remember that, right? Like, there's nothing on the left hand of the side of this chart. So when we're talking about it on Friday, right? Look at this. All of this is down, right? There's nothing here that says up. Nothing. So what's the key? If this doesn't tell you, what's the key? You have to already want to buy. So then as a bull, we can have an intelligent conversation and say, well, it's pretty risky buying a falling market. However, there should be profit taking around this price. So if you had to trade, if you had to buy into that, you should buy into that profit taking. And who knows? Maybe, right? Who knows? You're not really out of the free and clear until you're beyond this price. Once you're beyond that, you'll probably get up in here. Your risk at this point now as a bear is that it falls here again or it falls here again. Now, why would it do that? Well, that's what falling markets tend to do, right? So nothing on this chart says buy, but you should know that there's a take profit in there and that there should be some sort of bullish move. We just don't know how long it will last, especially with the holiday. Morgan's still holding that, right? But do you guys remember trading and you just had no idea about these things? You're like, man, it's been falling and falling and falling and falling, falling. Sure, great to know that now that's where it'll stop. I just hope you can do it without me. Thank you, T-Bone. Thank you, Tony. Mr. T, come on, you've been around a long time. Wait, are you the real Mr. T? Will the real Mr. T please stand up? I'm Mr. T. Yes, I'm the real Mr. T. All the other Mr. T's are just imitating. Will the real Mr. T please stand up? Please stand up. Please stand up. Two currency traders around the outside, around the outside, around the outside. Yeah. Chicka, 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 Mr. T. Moved countries, where'd you go, bro? Do tell. We're interested in this stuff. Where'd you go? Thailand. North or south? Central. Oh, forget it then. Really? Yeah, well. Yeah, I'm just kidding. Yeah, Mr. Thailand. You talk Thai? Yeah. My Thai sounds a lot like Vietnamese. Right? Yeah. I learned all my Vietnamese from Rambo movies. Yeah. And you're like, wait, they're Mexicans sitting in rice paddies in Southern California. No. They're Vietnamese. You know, the old spaghetti westerns back in the black and white movie days, they would have Italians be the Indians. Because you couldn't, I don't know, get an Indian? Can you imagine? Like, what's that Italian guy doing with the feather on his head? Oh, no, he's not Italian, he's an Indian. You're like, what? That's not kimosabi. Yeah, is that Al Pacino? It's just funny though, right? Like the world is strange, like, right? And now in Hollywood, when you need an Indian, it's the same dude in every movie. You're like, the same Indian, every movie. Right? Yeah, and then you get situations where they hire straight guys to act as gay guys, to be a gay character, and then they hire gay guys to be the straight character. I'm like, if it's a gay character, why can't you just hire a homosexual actor? It'd probably be more believable. Like, I don't get it. Hollywood is a really confusing place. Yeah, all right, we got to move on. Thank you. All right, so yeah, so everything's done what we said it would do, right? Oh, wait. This is an S, so the top is an R. Let me move this. Let me adjust. So that's the projected top. Just wasn't sure if you saw that or not. Okay, cool. It's dollar strong. Great. What if you were a dollar bear? Did you lose a ton of money yesterday? I mean, you certainly could have lost money, but would you have lost a lot of money? Yeah, because there wasn't very many setups. You could have tried, but nothing would have worked out. You probably didn't put one trade on every currency pair, right? All that kind of stuff. Nothing was probably moving in your favor and all that kind of stuff. So if you did your job right, you'd be all right. Now, we don't know the outcome of any of this. All we knew of Friday was the dollar had been weak for a while, but we were in reversal zones, and that's all we knew. And we don't know how long that would, if it would take shape, and if it did, how long it would last, and we still don't know that. Okay, but my point is, it's all tradable. So now, if you've missed it, but you are a dollar bear, let's say because of global macroeconomics, and you think the world's going to expand and all that kind of stuff, and once we get this treasury nonsense out of the way, US dollar weakens again, great. So, right, sit down, shut up, and get ready for the next trade. I've identified multiple currency pairs here where the possible buy zones are. I'm looking at Euro USD, and as we talked about last week, right? This is a possible area to buy. I think a little further down is better, but you know what? If it went up here at the M2, that suggests an M4, and we're hot to go HOTTOGO. So it's kind of hard to get on the US dollar buying train when that was Friday's plan. It's Tuesday, right? You can't start doing Friday's plan now. And then you're like, oh, well, Wayne told me to buy a US dollar. Oh, my God. Right? So if you happen to be a US dollar bear now, you need to start setting up those plans. It's not quite ready on Kiwi dollar, but it's ready on Euro dollar. It's not quite ready on Aussie dollar. It didn't occur on USD Swiss franc, so you're like, oh, that's not cool. It's getting ready to set up on USD yen. And we're at the sell zone right now on USD CAD. So look, CAD's ready to go. Euro dollar's ready to go. USD yen's thinking about it. Oh, did PIG already go? So like, that's the new thing, right? What's your next plan? Set that up. I'm just teaching you how to think. I'm not putting you into trades. Yeah. Hang on. All this phone is freaking out. Everybody's freaking out. Freaking out. People freaking out. I'm freaking out. Hang on. Gee whiz. Oh my God. It's so busy. It's ridiculous. So busy. So I'm going to spend the whole weekend, as you know, at Cambridge, hanging out with two different central bankers, actually. In the morning, Friday morning and Monday morning, I'm meeting with the central banker. But all day Friday, Saturday, and Sunday, I'm hanging out with a different central banker. And a friend of a friend of a friend of a friend introduced me to some dude that has a bond. And it's so big that he has to get permission from a central bank to sell it. And I'm like, what? So it's a foreign central bank? So I'm like, well, let me see this bond. And I'm like, wait. And I start doing my foreign exchange calculations. I'm like, that's worth $14 billion. 14 billion US dollars. Like now, in today's money, like right now, it's worth 14 billion. He's like, yeah. 14 billion? Who owns a $14 billion note? And he's like, yeah. I'm like, look, I don't have time to look at any details at all. I don't know anything about anything on this. But you probably need to talk to a central banker. I'm hanging out with central bankers this weekend at Cambridge. Why don't you fly out and meet me in Boston for dinner? Right? Like, you know, just meet me at Harvard Yard. It'll be about 8 o'clock. We'll just cruise out. We'll sit down and have dinner. Tell me your story. If I know anybody that knows anybody that knows anybody that can help you out, but just stay on by. So we'll see if he shows up. No, he's not a Saudi. But it's just like, what? Right? Like, really? Who does that, right? So I want to know, like, where'd you get this, and why'd you do it, and where's all this money coming from, and what, like, right? Like, what are your coupon payments? Like, I just want to meet a dude like that, don't you? It's not even like a hedge fund or anything. Just like totally right. Like, holy mother. Whatever, yeah, swing them by. Yeah. No, but I'm like, perfect timing to be hanging out with central bankers in Harvard, right? So I'm like, all right, fly out, meet me in Cambridge. All right, so Rand, beautiful. Look what I set up for you guys last week. Is that last week or yeah, it's last week, isn't it? No, is this monthly? That looks like a monthly pivot. Right? That's oh, I'm that zoomed out. All right, that's no. All right, so these are monthlies. You can tell by the gap. Monthly S1. So begs the question: if you're watching the dollar pairs and you see the USD starting to whimper and all that strength is gone or starting to erode, maybe you go take a Rand trade, huh? You see it? Target being much lower than us. You know what I'm talking about? Was that the M3? Yeah, see? Yeah, there was a lot of dollar strength on these charts last week, so it's really hard to see otherwise. Double top on gold. Very surprising, right? Look at that. Yeah, look, I got it all mapped out for you guys. Look, it's all mapped out. Still down here is still the level of support. Cool. M3 to M1. Yeah, I'm thinking it'll wimp out. Even though it says M1, I think it's thinking S1. Yeah. Okay. Let's take a further look at this. Oh my gosh. What was that rate, eh? Ba 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 ba. Ba 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 ba. If I was a bull, it would be to buy down here. Yeah, so again, if you start to see US dollar whimper, this is a maybe buy, down here's a maybe buy, but after a double top, it's a lot less meaningful, right? When I get stuck in a range, I often tend to back out and let other people battle it out, let the bulls and bears battle it out, and then I'll pick the winning team. Does that make sense? Sexy beast. So there's the ZAR we talked about. How about Lira? Gee whiz. I mean, it's a perfect, absolutely perfect buy. I missed that one. Holy smokes. I mean, that's, oh my gosh. That actually pisses me off. I apologize for my crude language. But that's how I feel. I didn't see that. That is so easy of a trade. Especially if you're thinking dollar strength too. That's the best one. Out of all of them, that was the best setup for Sunday, Monday. The other ones you had to take Friday, right? But that, missed that one. Bummed out, man. That one bums me out. So I got to pay attention up in here now, but I want to see dollar weaken on everything. So how do I measure whether dollars weaken on everything or not? Two plausible answers. Anybody? Gold? Nah, I don't care about gold. Stocks? I don't care about stocks. Come on, give me the meat. Relative strength exercise, evaluating all dollar pairs. That's one good answer. And what's another one? Nah. Easier than all of that. Dollar index. Thank you, Abel. Dollar index. Okay. So if we start to see things roll over, then maybe we start taking some of these trades. I don't want to do it until it happens. I don't like betting. Okay? How was that? Did we have a good hour of power? More like 75 minutes of power. Didn't go through the calendar and stuff, but we're kind of out of time. Cool. Well, thank you for being on my team. You want me to play some jazz and we'll hang out for maybe a half an hour or so while I download the video and then upload the video and all that kind of stuff and then post the video. And I guess I have to do 2 videos since Friday's video is finally released by the stupid webinar company. It took them 4 days to get it for me. But you guys want to hang? Okay, cool. Well, peace on earth. May the pips be with you. May our profits be above average. I hope to see you tomorrow. And if you can, when I upload videos to YouTube, even though you probably watch them on Forex.Today, if you watch them on YouTube, can you leave a like and a comment? Just even like, thanks, Wayne. It is valuable. Really appreciate it. Great. So I'll do that now. I'll run the jazz music. We'll just hang out here for a while as a community. Okay? Cool. Cheers.